Fibonacci retracement is a very simple trading tool that detects pullback or bounce back levels when a stock is either on an uptrend or a downtrend using these percentage lines. But first thing we need to understand what's those percentages. Fibonacci is a mathematician that created a sequence such as each number represents the sum of the two preceding ones. For example, let's take 1 plus 1, it's 2. 1 plus 2, it's equal to 3. 2 plus 3, it's equal to 5, and so on. But now you're going to ask how this sequence is going to help us in the Fibonacci retracement, or how we get the percentage. If you take a number, for example 5, and divide by the one next to it, you'll get 0.618 level. If you take a number and divide by the second number next to it, you'll get the 0.38 level. And if you take a number and you divide by the third number next to it, you'll get the 0.23 level. And again, 1 divided by 2, it will give you 0.5. And if you're going to apply it in trading, this is the Fibonacci retracement levels. We take this and we transform it into percentage. Now let's consider when a stock is on an uptrend. We need to find swing low and swing high, and we start drawing the Fibonacci retracement line. I'm going to show you later on how to draw it using TradingView. As we explained previously, Fibonacci retracement is a tool to detect pullback or bounce back levels. An uptrend case is a bounce back play. As you can see here, the stock dipped back to 0.5 level. And based on Fibonacci retracement, this is a good buying point. The same case on a downtrend. So when a stock is on a downtrend, we need to detect the swing high and swing low and draw the Fibonacci retracement line. And after a small bounce back, for example at 0.5, we can get short into this trade because the stock is on downtrend. And for example, let's take it bounced back to 0.5 level and it started reversing, we can get short into this trade. But we have a serious problem here. Because either when a stock is on uptrend or downtrend, it can reverse from any level. Either 0.5, 0.78, simply it can reverse any level. That's why we never use Fibonacci retracement alone. We need to use with other trading indicators. Fibonacci retracement should be a tool to increase your win rate in your trading strategies and not the main indicator to get into the trades. So I found this stock, Harley Davidson, when it was around this area. So I took the Fibonacci retracement indicator, I found the swing low and swing high. So when it dipped around this area, Fibonacci retracement, it was around 38% level. So as we said, Fibonacci, we should never use Fibonacci retracement alone. We need to use other indicators with them. So when it was around this area, the marker indicator, which is very close to RSI, was oversold, and stochastic RSI showed an oversold state. If you watched my previous videos, you know that when a stock is between in a channel, stochastic RSI is the best indicator to use. So as you can see, we have many indicators that this stock should do a bounce back. The marker indicator, stochastic RSI, low of the channel, plus Fibonacci retracement. So we used Fibonacci retracement to increase our probability to win in our trading strategies. So after I bought when it was at this area, and I sold when it reached the 0.28 level. Okay, so I bought here and I sold there, and the stock made around 10% profit. So I'll explain again. So I used Fibonacci retracement as a tool to increase my probability to my trading strategy. It simply shows pullback levels. Okay, so after I bought here, I sold at the next Fibonacci retracement level, which is around 36.3. Here's another example on Boeing. We can see that Boeing is clearly on downtrend. So we take the swing high, which is around 400 level, and swing low, it's around $90. And I extend it. So after the stock on this chart, stochastic RSI, it won't help us because the stock is not in a channel. So stochastic will clearly not help us. So let's remove stochastic RSI. We will use MACD and demarker indicator. So on this downtrend, BA made a bounce back around $235 area, okay, here, and it was at 0.5 Fibonacci retracement level. At this point we can see MACD and demarker indicator showing overbought state. So this is a great opportunity to get into short. And especially when you're trading stocks, you need to check the fundamentals behind the stock. Why this stock dipped so much? So during this big drop on BA, it was during the COVID crash. So that's why stock dipped. So after it bounced back 50%, it's the company, it's still bearish. So that's a great short opportunity again. And all this indicator showing a sell signal, which is a short signal. So based on technical analysis, we used Fibonacci retracement as an indicator to increase our probability to win in our trading strategies. And this is exactly how you need to use the Fibonacci retracement. Fibonacci retracement should not be a tool to just buy and sell signals, because it doesn't work. It's simply some levels for pullback or bounce back. It doesn't mean anything. Okay, so that's why you should use other indicators with the Fibonacci retracement to increase your probability. So thanks for watching and see you in the next video.